Hi guys, welcome back to my channel. Previous video we talked about candlestick patterns, which is our ultimate foundation for candlesticks, and now we are going to move on to something a little bit more advanced, which is chart patterns. So what are chart patterns? Chart patterns are basically a series of candlesticks that form a certain pattern, and these patterns are being observed by the people in the past. And basically, by observing the repetitive patterns, people basically concluded that certain pattern means certain things. For example, when we see head and shoulder, get ready to go for a sell, and when we see double bottom, and we are getting ready to go for buy. However, there's still one universal rule that you have to follow and to take note. Chart patterns that are near to key levels are high win rate setups, or else, other than that, are pretty much based on luck. So I filtered some high win rate chart patterns that help me in my beginner phase, and I'm going to share this to you for free. So number one, head and shoulder or inverted head and shoulder. It basically looks like this. And for head and shoulder, what you can see is that there's a head in the middle, and then there are two shoulders at the same height on the left and at the right. So the bottom line, we call it as the neckline. Alright, so once we see that the price has broken our neckline, and that's where we can go for a sell. So inverted head and shoulder, which is the same, just that it's inverted. So same thing when you see that the price is approaching the neckline and going to break the neckline, and once it is break, and that's where we can go for a buy. And number two, which is double bottom and double top. It basically looks like this. It's like a W or it's like an M. But take note that sometimes it can be triple bottom or even quadruple. So when we see a double bottom, we can go for a buy. When we see a double top, go for a sell. Same goes to if it's triple or quadruple. And number three, we have rising wedge and falling wedge, and it basically looks like this. So very easy way to remember this. Rising wedge, we are looking for sell. Falling wedge, we are looking for buy. So which means that whenever you see that there's a rising wedge happening, and then what we are paying attention to is line at the bottom to wait it's broken. So when it's broken, we go for sell. And for falling wedge, we pay attention on the line on top, and basically once the line has broken, then we go for a buy. And number four, for symmetrical triangle. So basically it's a triangle that looks equal, and for this, very simple. As long as the price broken to either one of the direction, and that's where we are going to. If it broke down, go for sell. If it broke up, go for buy. And number five, ascending triangle and descending triangle, and it looks like this. Can be a little bit similar to symmetrical triangle, but there's a little bit of difference. For ascending and descending triangle, we can tell that there's a straight line, and then the other line would be a bit diagonal. It looks like a triangle. So on the ascending triangle, we are looking for a buy opportunity as long as it breaks the flat line. In descending triangle, same thing, as long as it breaks the flat line, we go for a sell. Another easy way to remember, if you can't remember, look for the flat line. If the flat line is broken, then that's the direction that we are going for. Right, now moving into the chart for some live example. So first off, we are going to look for head and shoulder, and right here we have one head and shoulder setup. So we have our head here, and then we have our left shoulder, we have our right shoulder, and the neckline is at here. Alright, so once the price has broken our neckline, and we go for sell, and basically it just go all the way down. And now we have our inverted head and shoulder. Alright, so the head is here, the left shoulder, the right shoulder, and the neckline is here. Alright, once the price has broken the neckline, it just go all the way up. And next off, we have our double bottom. So we can clearly see that price has rejected one time and two times here. So basically, this is our double bottom. So after double bottom, we go for buy, and price just shoot up. And next, we have double top. So double top, which means that there's two rejection on the top, right? So we have one rejection, two rejection at the same line. So this is the top. So double top, we go for a sell, and eventually it go down. Next off, we have rising wedge. So rising wedge can be a little bit tricky to find. Basically, a rising wedge is happening here. So this is the upper line, and this is the line at the bottom. So this is a rising wedge. So once it's broken, and prices eventually go down. And then we have our falling wedge. So falling wedge, same thing, we draw the upper line here, and then this is the bottom line. Alright, this might not be that perfect, but if you slightly adjust it, it still looks like a falling wedge. So falling wedge, once it's breaking up the top line, then we go for buy and eventually price shoot up. And next we have symmetrical triangle. So we can see that the top line, the bottom line here, this triangle looks quite equal, right? And once the price break the upside, and then we can get ready, go for buy and price eventually shoot up. Another example for symmetrical triangle, we have a symmetrical triangle here, both sides looks quite equal, and this scenario is going down. So the downline has been broken and eventually price just shoot down. And now we look at ascending triangle. So this is not the best example, but we can tell that there's a flat line here, and then there's like a diagonal line here that basically forms like a triangle. So price is squeezing in between, and once price broke up to our flat line, it just shoot up. And now we have our descending triangle. So descending triangle basically the other side of ascending. So the flat line is at the bottom and the diagonal line is at the top. So we can see price is squeezing in between here, and once it's broken, our flat line is just all the way shoot down. And now we are done with our live examples, and here the most important thing is sharing my trading strategy for chart patterns. Number one, is this chart pattern at your key levels? It can be your support resistance, it can be your MA, it can also be your supply and demand, or anything else that you have learned before. Number two, has the chart pattern formed already? If no, wait. If yes, go to the next step. Number three, did it show any signs of breaking? Again, if no, wait. If yes, then go to the next step. Number four, once it's broken, enter the trade immediately and set your TPSL to 1-to-1 or even 1-to-2. And last, if you like my video, do like, share and subscribe, and see you at the next video. There's a few links that in my profile that you can click on. There's my community, there's my partner broker, and so on. Alright, see you soon.